Hello and welcome back to the channel. Motionz Biz here. And today we will talk about a highly requested topic, and that is regarding utilization. Now, why is credit utilization very relevant? Now, when it comes to credit, you already know that credit utilization is anywhere from 35 to 40% of your credit score. Utilization really play a very important role. And that's why I tried to research and put together these 10 hacks and tips on how you can lower your credit utilization that will ultimately boost your credit score, and of course, which later on can really boost your chances for higher credit limits and approval for different types of loans, including business loans. Because if you are a new business credit lending institutions will still check your personal credit because they really have nothing to refer to yet, especially if you are a new business. So it's really relevant to keep your utilization low to boost your credit score. And of course, before we get started, I just wanted to welcome our new subscribers. Welcome to the channel, and thank you for deciding and making that decision to follow our little channel over here. And of course, to every subscriber in this group and for the followers of Motionz Biz, thank you again for supporting this channel. So in this video, I have outlined 10 hacks and tips on how you can lower your utilization. Now, on number 10, this is a hack and a tip that I have used, and some subscribers who have reached out to me asking how they can lower their utilization in order to boost their personal credit profile. And indeed, it has brought in results. And I just feel that I have to share that with you. So anyway, we're going to start with number one. And number one is, and I think you know this pretty much, is that you pay down your balance. That's the easiest and the fastest way to lower your utilization. But we also know that that is not always possible. Just do whatever you can to lower your balance. Now, if it is not possible for you to pay a large amount, then just do little payments throughout the month so your account can show activities and frequent payments. Now, if you are a member of Navy Federal, this is very easy to do because what you can do is make small transfers from your checking account to your credit card. And you can also do this with your other credit cards. You can either place it on auto pay, even little amounts, but that way, when you put it on auto pay, you actually forget the amount that you're paying. And what happens is that the more frequent you pay for this is that the sooner that you can lower that balance down. Another effective way of doing it is also placing your minimum payments on auto pay and making several payments throughout the month as well, even for smaller amounts. And number two is very practical. And of course, decrease your spending using your credit card. And this is very common. And sometimes we cannot really avoid using your credit card, but use your credit card to show activity and your ability to pay it off. But if it cannot be helped and you already know that you have a high balance in your credit card, try to decrease that spending and use your ATM instead and try to do number one. Number three is a very quick hack to decrease your utilization, and that is increase your credit limit. Okay. Now, I know that in this channel, we talk a lot about increasing credit limits with Navy Federal. And once you can request that and you are approved and you do it on the app, of course, it is a soft pull and it is the easiest way to lower your utilization down. Because once you increase your credit limit, then the ratio of your utilization decreases because now you have a high limit and lower usage. And of course, this is also something that you can request from your other credit cards from other lending institutions. And you would know that process better and get familiar with how you can request for this credit limit increases, and that would help lower your utilization. Number four, and something that you may want to consider if this can apply to you, you can take out a personal loan to pay off your credit cards. Now, just make sure that the interest rate on your personal loan is lower than your credit card rates, because most of the time with a revolving account, it is a variable interest rate, and usually it is higher than your interest rate for a personal account. So if you can qualify for a personal account with a lower rate, then it would make sense. But still, you are the best judge of that according to your financial situation and how much interest rate you will get from a personal loan. That way, you only have one payment to make, one interest rate. And if you really consolidate all your interest rates on your other credit cards, then your personal loan interest rate will be a lot lower and would be easier to pay off. And another benefit of a personal loan is that it is an installment loan and it does not calculate into your utilization. So think about this. You paid off all your credit cards, so you have very low utilization, even zero if you paid it off in whole. Now, with a personal loan, yes, you have a personal loan, but it does not count into your utilization calculation on your credit score. So that will really give you a boost on your credit profile. And once you have that personal loan, of course, you have a fixed amount to pay every month. And then make additional payments throughout the month as much as possible to quickly pay off that personal loan. Number 5 is something that we all know. You can always open or apply for a new credit card. Okay, when you have a new credit card and you are approved, then if you have not used that credit card at all, of course, it helps bring your utilization down on all your credit cards. But there is also a downside to applying for a new credit card. The thing is, it lowers your credit age. Okay, now, but since improving your utilization, especially if you have a high balance in your credit cards, is not a quick fix, okay, it has to be something that you can do over time to really control that and improve your overall credit profile. So it is worth doing it. And of course, another thing to consider is that when you open a new credit card, of course, you get another hard pull. So you are still the best judge of how your tolerance is for hard inquiries. Is it worth it for you? You know your situation better, so you can make that decision also. But at the same time, if you can improve your utilization, that is quite a high impact on your credit score. Number 6 is pretty easy, and I think this is something that a lot of you are already aware of, and that is do not close any of your unused credit cards. And this is especially with your furniture credit cards, some of your store credit cards that you don't really use a lot. So even if you do not use that, remember that is a big boost and a big help to your credit utilization. In my case, I have about 3 high amount furniture store credit cards that I haven't really used, but it does help the utilization a lot because it has a 0, 1 to 2% utilization on it. So it always keeps my utilization down. One impact that can affect your credit score when you close some of your credit cards is that it lowers your available credit, because remember, some credit scoring actually count your amount of credit that is available. Okay, so if you close that credit card, it lowers your available credit and it also lowers your credit age. And as we know, credit age is anywhere from 10 to 15% of your credit score. Number 7 is another quick way of lowering your utilization very fast. Okay, and that is having yourself added as an authorized user on someone else's high credit limit account, and that person's credit profile on that specific account will be reported to all the credit bureaus. Just make sure that that account is in good standing, has low utilization, and has on-time payments and no late payments on that account, or else it will also get reflected on your credit profile. So I know that that's difficult to determine, but if you know of somebody who has an excellent history, an excellent profile on that account, then definitely get yourself added as an authorized user. And like I said, that's another quick hack on how to lower your utilization drastically. Number 8 is very simple, but I know not many of us actually use this feature on your credit cards. Now, if we just pay attention, it will really help us in the long run because, as you know, we get very busy in our everyday lives and it is so easy to forget these things. And not many folks out there who have bad credit are bad people. It is just because they get so busy with life and forget the other responsibilities because there are more pertinent things to take care of. But with technology, with your cell phone all the time with you, access to your email, access to text, set up balance alerts on your credit cards that when it reaches a certain percentage of utilization, it will send you a text and a reminder. You can set it up to 20%. That way, you will know that you still have a little bit of leeway, but it is something that you already have to take care of, either refrain from spending or paying off some of your balance. And it is just another tool that can help you keep track of your utilization. Let me know and share with us if you have done this with your credit cards. It would just be interesting to know. Number 9 is another very simple way of keeping your utilization low, and that is knowing when your credit card company reports to the credit bureaus, because not all of them report on the same dates. So if you can give them a call and ask when they report to the credit bureaus, then you can pay your balance down or pay it off right before they report to the credit bureaus. And let's say you can do that either 3 to 4 days before their reporting date. That way, it can report your payments instead of after the reporting date, which will still report a high balance on your credit card. And if you can do that regularly, let's say you're spending from that credit card and then pay it off right before it reports, it keeps your utilization down. And I know many consumers actually do this knowing when those credit cards report, and they pay it down right before they report, and it helps keep their utilization low. If you do this with all your credit cards, paying it down and bringing that utilization down right before they report, it keeps your score high every month. And that is one way of maintaining a high credit score. And going to number 10. Number 10 is a very simple hack that I don't think many consumers are really taking advantage of, and that is using self-funded credit builder accounts that is revolving. Okay, with this kind of accounts, there are quite a few accounts out there. It can be a revolving credit account. It is being reported as a revolving account. And one example of this is the program for Credit Strong called Revolve. Okay, now I'm not an affiliate of Credit Strong, just to be clear about that. But I have read about this program where they report this account as a revolving credit account. Now, as you know, credit revolving accounts report utilization, but there are also self-builder accounts out there that are installment loans. So pick the one that is a revolving account, because that's what you need for your utilization. Now, one thing with these types of accounts is that it does not matter if you have a low amount credit on these accounts, because guess what? Utilization does not count how much credit you have on that specific account, but it will report only the percentage, okay? The percentage of utilization on that account. Now, let's say you have a $250 self-funded revolving account. You only use $1 of that account, keep it low, and then pay it off right away. So pretty much it is reporting only like $1 or $2 left every month. So that will boost your utilization, because it will calculate that percentage, including all of your utilization on all your credit cards, and divide it by the number of accounts you have. And guess what? It brings your utilization down. If you know of any other programs, self-builder accounts that report as a revolving account, please share that with our community so we can all learn from it, and maybe some of our community members can check it out and they can use it so it can help bring their utilization down and boost their credit scores. That would really be appreciated. So far, I only know of one account right now, and that is the Revolve. I haven't really checked other programs, but that would be very helpful. So again, it's Motionz Biz here, and if you know of any other hacks and tips to bring utilization down, please share that in the comment section below so we can learn from it. And as always, thank you for your support. Until next time.